with a banking license where fintech can plug into it, right? Because they need as well the license somehow. Because we see, I'm also my new move right now is more about establishing bridge between traditional finance and DeFi, establishing bridges between crypto and fiat.
Welcome to the latest episode of What's Next with Gaurav and Ronit. Olivier, welcome to the show and thanks for catching up last night with us.
Thank you, Ronit and Gaurav. It's really a pleasure to be with you today.
Olivier,
Looking forward to
for the audience who don't know you and have not been Googling you or stalking you on LinkedIn, give us a little quick flavor of your long and distinguished career in financial services. You worked in banks, global banks, regional banks, in I don't know how many, half a dozen countries, then fintechs and neobanks. Tell us a little bit about yourself. Give us the
Yeah, so I just as always start by saying, in fact, I'm a lawyer and I'm from France, as you can tell from my accent. But I never work as a lawyer and I never work in France, right? So I've been working in banking. I start almost by accident in banking across many continents. Latin America, I started in Argentina, then Asia, quite a few countries in Asia, US, back to Asia, and again, and now in the Middle East. And most of my career was with traditional bank, Citibank, 16 years with Citibank, again, across New York, Latin America, Asia, and DBS Bank, which is one of the biggest bank in Asia. And more recently, it's not so recent anymore, but 10 years ago, I started pivoting from being a traditional banker to become a little bit cooler and get involved in digital space. So it's when I was at the time COO of retail and wealth management for DBS, and Piyush Gupta, the CEO, asked me to start a new division for the bank. So it was in 2014, Digital Bank, DBS Digital Bank, and is where really, I would say, a second career started, where I started getting a job that was more an entrepreneur job. And as part of it, I launched Digi Bank in India for DBS, Digi Bank Indonesia, and Digi Bank Vietnam. So in three very interesting countries. And then I got the chance 5 years ago to come to UAE and obtain, and my task was to obtain a license for a new bank. That was we got, and it was the first time in over 20 years a new license was given and launched. So the corporate bank was launched. The retail is ready to be launched, and now I'm doing new entrepreneur initiative at the moment.
So take us back to the early 2010s, mid 2010s, Olivier. What is happening? What is in the air? What is in the water? Why are banks, so obviously you mentioned DBS and Piyush, why are incumbent banks thinking about new types of doing banking? Why are new entrants coming into the banking world, most obviously in the UK back then, with the start of what became Monzo and Starling and so on? What was happening in the water back then? Take us back 10 years.
So 10 years ago, right, is a lot of, the world was changing and it keeps changing and is still accelerating, I know. But it's where people got used to different kind of experience that was brought by digital company. And I think the expectation of client has changed at the time. They want to get access to information immediately. They want to be able to get to do a transaction on the spot. They need to know what happened. And that's because, you have a new company, Amazon, Google, ride-hailing company, where I start providing this kind of experience to clients. And people start realizing, oh, in fact, we don't need bank anymore. We need access to financial product, and we need access to financial product in a way and with experience that is similar to what other industry are giving us. So it's where really every bank start seeing also new neobank coming, offering great product and solution, and at a fraction of the cost, and being very scalable. So at that time, every bank starts realizing, okay, what do we do? Should we just wait and get all our business taken by these new players, or should we start something new? And what my organization DBS decided to do at the time is, okay, let's create a structure which is linked to the bank, but has its own kind of autonomy to be able to experiment, to do new things. And one great option is, where do we start? So do we start where we have the main market share in a country where we have the risk of cannibalizing everything we have? Or we start in a country where we are small, like India, Indonesia, etc., and then bring back all the solution we implement there into our head office, right? So this is exactly what has happened. Many banks start doing that as well at the time. And it was the result of the world changing. And what we are seeing is that the difficulty is that, because this is why you have a license, this is why people trust you, but you need to combine it with the DNA of digital, which is more about customer centricity, better leverage of analytics, be able to partner with new player, and a lot of partnerships start happening with fintech, startups, etc. at the time, and having a very, very strong analytic platform. So that's what the traditional bank started doing. And it was good for everybody, right? It was good for the customer, obviously, because the product were built for the client and not anymore for the bank. It's good as well for the country because, most countries have a very aggressive digital agenda. And to be able to support that digital agenda, you need really to have a native digital data built kind of organization. Otherwise, you cannot cope with the speed and the scalability you need.
So at the same time as you are and your colleagues at DBS around the world, and it's been half a dozen years since many of them got operationalized, with the benefit of hindsight, and I'm now talking about the new entrants, the independent players, not the bank-funded ones. We'll come back to those, but the independent ones like the Monzos, Revoluts, all of those. How would you assess their impact? Like, have they been individually standalone successful business? Because they've been around for a long time in the UK, now in Hong Kong, in the US. Have they been, and in France, have they proven themselves as independent companies, as independent financial services players? What's the kind of, you have to do like a balance sheet, a scorecard. How would you do it?
So I think that you have obviously different level of success in a neobank, which are not built on top of existing bank. And they have been very good at acquiring new clients, offering very often good services, and most of the time a good interest on deposit that other banks may not have been able to offer because the cost of a traditional bank is much higher, so you cannot sometimes compete. The one who managed to succeed and establish themselves very well are the one who have been able to add to kind of traditional retail product lending, some kind of lending capabilities, right? Because it's really where you can make your bank profitable. But it's very difficult because you need a very big balance sheet to be able to do that. So that's some of them have been able to do it. Also are staying in a kind, I would say, a niche, right, where maybe the expense is not so high, etc. But they are doing okay. They are providing a good service to client, and they remain a secondary bank, I would say, compared to other banks. So I said they sell fine to be in this. Where I see some success in terms, sometimes you measure success by the money you make, right? But I think it's very important as well on this area to look at the purpose of this organization. And you have banks that are really successful because they are able to provide access to banking or financial service to traditionally unbanked people. And you have a lot of this in most emerging markets. You know, if you look at the emerging market, only 25, 30% of people have a bank account in many countries. Many people can never get access to a branch because they are in a remote location. They don't have the education needed. But I think, they are all this kind of bank or payment solution and so on in countries like in Africa or in Asia are successful from that point of view. Of course, the balance sheet is not huge. Of course, they are praying on making a lot of money, but they're able to provide a service at a reasonable cost and a reasonable margin as well. So that's, I think, what I see. And they are showing the way as well to other more traditional banks. And that thing as well is very important. I think it's part of the success of digital banks are pushing. They are pushing everybody to transform, to change, to contribute, to be more kind of having kind of a vision of supporting the people. So that's one of area where we see our success, and you see a lot emerging in many banks. It may not be the Revolut we talk all the time, but there are banks in many parts of the world who are providing this kind of service. In Vietnam, Cambodia, I was in Myanmar like a couple of weeks ago as well, right? So you see this bank doing a great job on the ground.
I want to get into dig into some of the nuts and bolts of building a fintech or a neobank. But I want to bring in my partner in crime, Gaurav, to lead this part of the grilling because he's got much more operational experience than me. So Gaurav, let's dig into the nuts and bolts of building a bank, and what does that mean?
Thanks so much, Ronit. Olivier, it's a pleasure to have you on this show with us here because I think you're one of the few people who have been on here amongst our guests who can provide a perspective of a previous generation of to share with our audience perhaps how different was your approach, if at all, when you were building a digital bank for your previous journey, as opposed to, say, when you came to the UAE and had a new mandate to build a digital bank, which I believe was from scratch. Can you walk us through that journey, perhaps, and give us some insights there?
So it's a big difference. That's a great question, Gaurav. The big difference is that on the first three banks I built, it was built on top of an existing bank. So that means that you go and build maybe the technology, you are going to build the customer experience, you are going to build the analytics different from the traditional bank, but you're able to leverage the stability of the existing bank. You leverage HR, you leverage compliance, you leverage the risk experience that you have and years of risk experience, right? Obviously. You leverage all these ancillary support services that take a lot of time to rebuild, right? To rebuild a full risk processes, policies, compliance, etc. takes time, right? And getting the right people to do it is also very difficult because, when I mentioned the DNA of banking, you need bankers. But very often, we all believe we are all digital and we all believe we can build, but running and building is very different. And so that's this kind of things you need, right? But when you build on top of an existing bank, you have people, it's probably easier to integrate them in, and leverage them because they don't need to reinvent everything from scratch because you leverage a lot of what has been built over time. You improve it, obviously, So it's more on these areas, what legal, compliance, risk, etc. Even HR is when you build from scratch, a new bank from scratch, HR in a bank may be different from as well other type of organization. So that's one big difference. And when you start totally from scratch and you want to build and obtain a license for both retail, corporate, treasury, you need to have everything, and it takes time to build everything. It takes time to build your ICAP program, liquidity planning, Basel kind of reporting, etc. from zero, and you have to count on yourself and the people you have to build it. So that's why it's a little bit more complex on that area. But in the other hand, you start with a white page, and you can reinvent literally and question, okay, why we have been doing things and how we have been doing things previously. So that give a lot of some what you lose in one hand because you are not leveraging another organization. You earn on the other side because you have more speed, more freedom to create, etc. So that's a key difference. And you can start literally on a white page. Or what do we start when you start a bank? What do you do first? And a question I was having: should I hire technology? Should I hire compliance first? Should I hire Because when you build the technology, you need the compliance people, you need the operation people, you need the risk people. Otherwise, it's not going to be suitable. So that is a very interesting part. And you can you have learned as well from the experience of traditional bank, what are the issues of traditional bank, to try on the architecture of your technology or analytics to make sure what you build is closer to what the digital player have. And you don't have all the legacy issues that you have in any other organization. So, it's very challenging, but in some areas it's much more difficult, in other areas simpler. But that's how I will describe it.
So when you started building your brand new digital bank from scratch, I think a lot of people who are listening to us today are people that want to start and have big ambitions and believe that they can build and disruptive businesses that can do things better in financial services. So for someone from you who had that experience from a very strong financial institution going to a white paper, what did you do? I mean, like you said, right, I had to start with HR, I had to start with building a tech. Just looking on that technology piece yourself, what decision did you come to build in-house versus using tools that are already out there? Because there's so much available, which is globally verified and stood, systems. There's traditional system providers. There are cutting edge new startups also that provide banking as a box services. What did you decide to approach your tech build for this company, in-house and with other partners?
Okay, great. A great question again, Gaurav. So starting with key guiding principles and trying to stay within this guiding principle. And because I always say on day one, you don't have a legacy, but on day two, you have a legacy already. Right? So key principle I'm going to, for the technology, I think is 4 key principles. Of course, there are a little bit more, but that we try to keep. One is the core banking. It should be extra light, right? Just doing what the core banking is supposed to do, some computing and maybe some product repository, but not what has happened in bank for years where, core banking, you have been adding over time a lot of functions like, and even put the data into the core banking. So that's why the bank have a difficulty. Each time you want to change something, you need to retest everything, even if you don't use it anymore. You have to, if you want to change your core banking, it's not possible. And I think it's by design. I think to be honest, right? I think the vendor makes sure as well, you will never be able to, because all your data is there. Everything is there. So keep it light. So that's why people told me, oh, your core banking, how do you choose your core banking? So no, you have to demystify it. You need something simple. The core of the thing is the middleware. And the middleware we built mostly on an existing solution, MuleSoft, right? And we Kubernetize everything. And that allows us to have the key application that makes the bank works at the middleware level. And what we own pretty much is orchestration. But we have added a lot of fintech or startup who are providing the solution, right? So another principle we have there is that when you put, for example, a PFM, and we choose a very good PFM from Monitor, which is a great fintech, we make sure that if one day we want to remove the PFM, we can, everything is going to still work. Because in traditional bank, you have so many interdependency between all your application that is impossible to remove anything. So that was a kind of design principle there. And we Kubernetize everything on the cloud, obviously. And the front end, we build it as well, the customer experience. And I have a chance to work with a friend, with Philip Stark. I don't know if you know him. He's a very good designer. I did that because he's a friend, because, you know, he works for Perrier, he works for, big brand, and he kind of help us, right, to define the customer experience. And it's what we have been building on the customer experience. And the also concept, principle is the data, right? The data, where we need to maintain the lineage of the data across the system, where we have the lake, where we have very clear understanding of which kind of data is where, how you segregate your data, how you differentiate between your kind of data which are sensitive, customer demographic kind of things, versus what can be used and leveraged more. And other things we did is from day one, because that's something I learned when I did India and then Indonesia, is that it could have been much faster to do Indonesia if we have mapped everything in an enterprise architecture tool. So what we have been doing as well, we map everything, all from customer journey, policies, process, even API kind of connection. All that has been mapped in an enterprise architecture tool. So when there is an issue, anything happen, you can know, okay, just by looking on your enterprise architecture, you can define where it is. If one day the policy, for example, you have the policy on KYC is linked obviously on onboarding and transaction monitoring. If the policy change, you will know exactly which process is going to change, which customer journey has to change, which people need to be retrained because they are the one who are. So they as well, difficult thing to do because you need to get the discipline, but once you have it and you don't touch it after, or you keep updating it, is a fantastic tool to have. So this is from a technology point of view, the key things. And another things, which is not a guiding principle, but we were having a weekly architecture board meeting where we have pretty much everybody in the bank. Bank was not very big, right? We had maybe 30 people, right, representing every unit, where we were reviewing any kind of new application coming, changes needed, etc. And I can tell you this meeting was very useful because there were always someone, because we tend to forget, saying, oh, don't we build this part of risk in a core because it's going to be simpler. But the prime is simpler now, but in 2 years, we are going to pay for it. You have to stick to your principle. And I think this is the most difficult thing to do, not to try to get too many shortcuts there.
Wow, thank you so much for that. Could you tell us about that journey and give us some more insights about how you approached that?
Yeah, and the journey didn't go exactly as planned, right? So what happened is that literally is 1 year and a half, right, to build a bank. But at the same time, you need to get the approval and the license, right? So it's not, the timing may be different. You may be more ready, and another part is not ready. So what we have been doing, because we have a MVP initially, mostly to launch retail. But because there were some delay across, right, we keep building more functionality. So we start building kind of the corporate bank platform, the supply chain finance platform. We start creating as well a loan product on the retail side. We create a good product which was it was the advantage of a credit card without being a credit card. So we were having a debit card, but with a kind of an overdraft facility on a saving account. So we built all this kind of product, and then when the license was approved, in fact, 4 years after, like in July 2021, 2022, then we start launching the corporate bank straight after. But in fact, it changed because we're planning to launch retail first and just launch retail initially. But because we have extra time, we keep building and building and building. Instead of, because we have a team already, we have the entire team was there. So they were kind of this timing is as delayed, but at the end of the day, it was not too bad because more product were built during that time and were ready. And deciding to launch with corporate first was because corporate is usually bigger ticket size, maybe fewer transaction. You can be profitable much faster. In fact, on corporate, you can be profitable in 1.5 years. On the retail side, it's going to take at least 5 years, right? So then you can start making some profit on the corporate side before you really can go on the retail, right? If you would not have this kind of delay, retail would have been fine to launch first after 1.5 years, let's say, and then later on. But we had to change the plan because of that, because of what you mentioned about the cost, right, as well, and how profitable you need to be, and when you can be profitable as well.
I think as an entrepreneur and the way technology is today, we're always learning about technology and where we need to be active or passive or work with other people to achieve results in building products and services, especially when it comes to financial services and technology. So I always think we're never going to stop learning, that's for sure, and relying on people. I think in your journey now, what's super interesting is, given what also Ronit touched upon earlier, this conversation that started in 2010 with the idea of neobanks, and there was a very, very strong conversation on one side. Traditional financial institutions were saying these companies are going to disappear in 6 months, and on the other side, all these ambitious young startups said that we're going to replace all the incumbents because they don't service the industry correctly. And then we saw them sort of coming together in some fashion, in some way. Where do you think, this whole world of neobanks is going? Do you see a lot more collaborative efforts? Do you see a lot of consolidation happening, or do you see, a lot of the other banks which are not extremely well funded from a neobank perspective? Because I believe genuinely you need a lot of good financing to make this happen, will just fade away. Where do you see that happening in your journey of a geographical review?
So what happened is what is the difference between a bank and between a fintech? There is one. The bank has a license, right? And the bank, I see the bank, the reason d'être of a bank is to manage risk. Okay. And this should be really the focus, right? What is a bank, right? It's manage risk, right? It's manage risk for client, for the bank, and the bank, cannot do everything. And digital means you need to work as a platform, right? You cannot do everything yourself. So you need to really, the bank, and we have seen that on a DeFi, right? When you don't have a regulation or anything happening, you hope people will do the right thing, but they don't do the right thing. So how are you going to bring this kind of risk, expertise, and DNA into a decentralized system? That's a very difficult thing to do. But on a more traditional kind of digital, more and more partnership, obviously, with fintech, startup, we can provide solutions that are going to complement what a bank is offering, and what a bank is offering is a risk management. That's the way I see it. So if you think that being digital means doing everything yourself, not partnering with everybody, you're not going to go anywhere. So that's, again, so for other fintech people and startup who are listening, I think there is a lot of things to do if you focus on the right product, and what's happening as well in open banking is giving new opportunities, hopefully. And again, I think everybody realizes now, the traditional bank as well as the fintechs, that each other need each other. It's not either one or the other. It is going to be both.
Thank you so much, Olivier, from my side. That's all for today. I look forward to catching up with you again and hearing all about what you're up to outside of the conversation we've had here. Thank you so much. And Ronit, back to you.
Sure. Just to wrap up the conversation, we started this conversation by talking about a decade ago, your transition from traditional finance to sort of the digital challenger bits of finance. If you were rerunning this again, you're making that transition from traditional financial services or whatever, and it's 2024. Instead of going and setting up or helping set up Digi Bank in India or Indonesia or wherever else, what would someone like you, an Olivier 2.0, be doing now? What would they be thinking? Like 2 or 3 years ago, many of our friends were like, it's crypto or digital assets or Web3, or what would they be doing now, do you think? Or what would you be doing if you were 10 years younger?
Right. So there is one project I did 10 years ago. And I think it was maybe a little bit too early. So I know it will be the perfect time.
Okay.
So it was like implementing, I don't know if you remember, IBM Watson into a program where we were taking all the recommendation from the investment counselor, the analyst, Bloomberg, etc., about equity, fixed income, funds, and FX. So we're inputting into the system. And on the other side, we were having customer portfolio, risk appetite, investment objective. And we were coming up with recommendation, and we were saying why it was the right recommendation. And we have been mapping the process thinking of a fund manager, right? And the consider, etc. We say, okay, how do you take your decision? We put all the criteria in the machine. It works well, but not well enough. And now when I see we move from predictive AI, where from 2 input you come up with an output, which is kind of decision tree, but is what you have with a little bit of natural language processing, a little bit of self-learning coverages. Now with generative AI is the perfect time, because now we have the content. We have the content creation. Generative is content creation. And you can articulate much better the solution. So if I'm 10 years, but I'm maybe 10 years older, but that doesn't mean I'm not going to do it. There is always a good time. And and in fact, I saw that some organizations are start doing exactly the same project, but with the new technology, I think is going to be a game changer. And there are so many as well in generative AI. There are so many opportunities as well on blockchain, right? And we are just scratching the surface. Another project I told you I started in security services. And what I think right now, we are reinventing security services on a blockchain. But with much more capabilities, because you have, as you know, when you're on blockchain, you have traceability. So it's giving. You have as well. You can do what something we struggle for years is a true delivery versus payment that we never managed to get, because you have always a millisecond between the delivery of the securities or delivery of a trade finance and the payment in cash. So we need credit line, etc. But now I think with the atomic settlement you can do exactly at the same instant, you may get rid of credit line for this. So is all this smart computing, all this generative AI, all these Web3 things coming up is, I think finally we are going to be able to do what we dream we could do and never thought it will come. But it came very quickly at the end of the day, right? Look at ChatGPT. It took everybody kind of by surprise. I would say how fast it was available to people on the street. And so they are kind of revisiting what was done before, I would say, as an answer, and with a much better tool and technology can be a great challenge.
And do you think so? When you sort of zoom back and look at what's the most exciting thing out there, either in technology or in finance, we just talked about AI. Is AI the big thing now for the next few years? Is that where we should be focusing?
I think three things: Web3, blockchain, and AI.
And how are you going to knit those three things together?
Okay, so you have the NFT tokenization, for example, right? You start seeing, then you need to notarize it. You can use AI to kind of find the best kind of matching. So there are a lot of use cases. I know that the intersection between the three, but what I know is that Web3 needs content. AI is providing content.
Perfect. Yeah.
And NFT, which at the end of the day, people say is a non-fungible token. So they answer a question, but another question: what is a non-fungible token? And they have a smart contract. And smart contract as well can give you a lot of things. And if you combine with AI, intuitively, I would say it can do wonders. So the three, I think this is the three, obviously, at the moment, right, the three I see: blockchain, AI, Web3. And probably others will come on top, but that's trying to find something at intersection of the three can be very powerful.
Yeah, you're definitely right that AI is going to be powering everything. Whether it's Web3, whether it's XR, extended reality, what we used to call the metaverse before, AR, augmented reality, the whole 9 yards or the whole whatever yards, as the Americans say. This is it's all going to be coming together. NFTs, who knows? They're currently non-fashionable tokens rather than non-fungible tokens, but we can park those on the side for the time being. Maybe they'll come back too. But Olivier, it's been a pleasure to host you with Gaurav today. There's so much to chat, given your vast experience in the area and across multiple continents, business models. Thank you so much for joining us. And if there's any one final word, like a parting, like, a kind of bit of advice to people listening to this podcast, whether they're young or old, and they want to stay on top of everything that's going on in fintech and financial services or Web3, or just the future of money and the future of technology. Are there sort of some sources or resources you would recommend? Are there certain websites or Twitter or X handles or whatever they're called these days? What would you like if you were giving advice to, say, someone coming out of university or someone, deep into their career? What would you tell them? These are the 2 or 3 things you should be listening to or following, apart from our podcast, obviously.
So what I would say, right? The technology is easy. The strategy can be easy, but it's difficult because it requires many different skills. Particularly when you're in that space, you need at the same time people who are digital and people who are kind of risk focus, and that's very difficult to find the right balance. And also you need people who are able to build, and very often you have people who are able to run, right? So, and that's very different. And also because everybody believe it can build, everybody believe it is digital, and it's not necessarily the case. So that's the few advice I will give, right?
Absolutely. So it's about staying open to challenges, staying open to opportunities, learning and doing rather than just learning and sitting in your sofa. Thank you so much, Olivier, for joining us and
Yeah,
sharing your
welcome.
knowledge, wisdom, and experience.
Bye bye. Thank you, guys.